Okay, welcome everyone to another edition of the Oxford Clubroom. Very excited to be here. I will say I was looking at the chat as we started and I saw that Rasputin is going to be also watching the Trump trial during our session here today. I think we're going to be more interesting, but you never know. We'll try and win over Rasputin here as we go. I'm very excited today because we have some special guests with us. These are two of some of the greatest business builders and investors in America. I'll start by introducing you all to Frank Trotter. Frank has been in the banking business for over 40 years. He co founded Everbank, which was the first ever full service online bank. And Everbank is near and dear to my heart because for years it was the sponsor of the Jacksonville Jaguars, which are my favorite NFL team, sadly, with how they've performed over the years. But you may have seen Everbank Stadium. That's the company that Frank founded and then sold to TIAA in 2017. Everbank was a really cool business because they truly cared about their customers and delivered a lot of really creative, one of a kind, high yield products. And so we wanted to have Frank on to talk a little bit about what kind of products you can use to capture high yield in this new higher interest rate environment that we're in. I also will say Everbank was a tremendous return for early investors as well. It had huge growth, was a great business, and when they sold it, their investors made a great deal of money. It was really a fantastic investment. Many of you probably also know Rick Rule, legend in the natural resources field. He's been a professional investor for over 45 years, the founder of Sprott Global Resource Investments, with over 250,000 clients and $25.4 billion in assets under management. For those of you who do know Rick, you know he is the guy when it comes to hard assets, gold, mining. Rick is really the leader in this area. He's also a big contrarian, and he's going to probably deliver some contrarian views today. But Rick is known for finding assets of real value available at undervalued prices. So, really excited to have Frank and Rick here today. They're actually working on a new project called Battle Bank together, which is geared towards helping savers find unique hard assets and high yielding opportunities. So they're going to talk a little bit about that today as well. And then we have Mark Lichtenfeld, our chief income strategist at the Oxford Club. This session is going to be all about finding unique income sources to compound and grow every year. So Frank, Rick, and Mark are going to help us through that. First, I just want to say welcome, Frank, Rick, and Mark.
Thank you.
Good to be here.
Thanks so much for having us.
So I want to start with why we invited these investment greats here, and in short, it's because I think investors are faced with a serious challenge right now. And that challenge is that the cost of living is really soaring so fast here in America that many income producing investments simply can't produce the kind of income needed to keep up with the rising cost of living. So I'm going to hit on a couple of facts here that I think are pretty interesting when it comes to inflation and rising costs. So first of all, the average $1 million home now is only 2,600 feet. Like you think back in the day, you get $1 million home that's 6 bedrooms, the swimming pool. Now it's only 2,600 feet. Property taxes have gone up the maximum allowed in most states, some as high as 30%. Homeowners insurance has risen 3 times faster than inflation. The average price of a new car is now $50,000, rising at double the rate of inflation. Car insurance just rose at the fastest rate in 47 years. Health insurance, biggest increase in more than a decade. Childcare is rising at double the rate of inflation. Tuition is 5 times the rate of inflation. I can tell you all, as a parent of 2 young children, these costs are completely out of control. And so in order to deal with this, the fact is your returns will need to be even higher going forward to keep up with all of this. So I'm going to start with a quick poll. We're just going to ask you which you believe is rising faster, your cost of living or your income. And as you all answer that, we're going to get into asking some questions for our experts. So, Rick, we'll start with you. When we last spoke, you mentioned that inflation is actually much worse than the government reports. And a lot of the facts that I just gave you are, one thing after another, doubling the rate of inflation, tripling the rate of inflation. We're seeing massive increases well beyond. Can you talk about what the real rate of inflation is that's out there?
Yeah, I think from a human perspective, we need to differentiate between the government stated rate of inflation measured by the CPI and what I would consider to be inflation, which is to say the deterioration in the purchasing power of wages and savings in U.S. dollar denominated assets. If you pay attention to the CPI, you would think that inflation as measured by the CPI was limping along at 2.7 compounded. In fact, my suspicion is that the deterioration in the purchasing power in U.S. dollar denominated savings is closer to 7.5. To begin with, the CPI, when it's inconvenient, doesn't measure food and fuel. If your viewers will look at me, it's fairly obvious that I like to eat. So a measure that doesn't include food is of very little use to me. Secondly, and Todd, your dad has done great work on this, Mark Skousen. The index itself is hedonistically adjusted, which means that the big thinkers assign a value to your computer or your house that has nothing to do with what you paid. But the oddest thing is that that measure of inflation doesn't include tax or government expenditure. I'm happy to say that if I didn't have to pay the tax, I wouldn't complain quite so much about the index, but that isn't on offer. When I look at the basket of goods and services that I consume, not that tax is a service, but when I look at my cost of living, I believe that the deterioration of the purchasing power of the US dollar relative to the basket of goods and services that I consume is more like 7.5%. I think it's an excellent thought exercise for your listeners, and you'll never get it right, just get it close, to measure what they think is the deterioration of their own purchasing power and use that for budgeting.
Right. I mean, absolutely, that makes sense. And I think we all feel it. There have been a lot of articles that have come out that say things like, the economy's so good, why are people so down on it still? And I think what they've failed to realize is when you look at every cost in your life, car insurance, home insurance, property taxes, childcare, tuition, everything rising as fast as it is, you're going to feel a bit overwhelmed. And the big question right now is, we have inflation numbers coming out tomorrow at 8:30 a.m. And the market's been really watching this closely because interest rates are going to be affected by what that inflation number is. Now, Mark, at the beginning of the year, you predicted the Fed would not cut rates, which was quite contrarian at the time, but it seems to be proving out that you were right. Why did you believe a cut wasn't coming, and what do you see for the rest of the year?
Yeah, I believed a cut wasn't coming because I did not expect inflation to get down to the Fed's 2% target anytime soon. That's the crux of it. The Fed surprisingly has done an okay job so far. I'm shocked to be actually saying that because inflation has come down. But it's nowhere near where it needs to be. So for this discussion of cutting rates, which has been going on since last year, to me is insane. And that's really what it came down to. It was, I saw absolutely no reason logically last year and heading into the early part of this year for the Fed to be even thinking about cutting rates. Meanwhile, all of Wall Street, thought it was going to be an absolute certainty. The Fed funds future rate had like a 99% certainty or probability that rates would have been cut by June. That back in December and January. But now, even now, and just in the last few weeks, there was talk about Fed rate cuts again. It was starting, but to me, there's absolutely no reason to cut rates. Sure, it would be nice for consumers and for borrowers, But with inflation not being anywhere near the target, I don't see any reason for them to do it. And then you add that we're heading into an election, so any rate cut would start to feel a little political, and that's a whole nother mess. But the bottom line is the data just doesn't show any reason to cut rates at this point.
I took a look this morning, and Fed funds are actually slightly higher today than they were this day last year. And you and I, Mark, were back and forth on LinkedIn right around the top of the year with all the predictions. And those ranged from a year-end 2024 of 75 basis points all the way up to 6%. I don't think I've ever seen that much dispersion in estimates. And as it turns out, it's really pretty flat. It's within a few basis points, but it's actually slightly higher.
Now, Frank, I'd like to ask you a question. So, according to the FDIC, the average savings account still pays just 0.46%. When you think about the increase in interest rates that we've seen everywhere, and yet your average bank is not paying people almost anything close to what they deserve. Bank of America is the number one offender in my view. Their highest paying savings account is just 0.04% interest, which takes you hundreds of years to double your money once at that rate. And a lot of Americans are leaving billions on the table by still having money in with the big banks. So how do the big banks get away with this, and what alternative do people have?
Well, I think, it's kind of funny. One of the CFOs at an analyst call last year basically said, well, hey, if they're not paying attention, we're not going to pay them anything. And we sort of have always joked over time that our biggest competitor is inertia. And I think a lot of your listeners are probably in one of those big bank accounts, paying 0.2, 0.3, 0.4, maybe all the way up to 0.46. And I think what you have to do is like you do for everything else. You got to look around. I jumped on a couple of the rate services this morning, and you can get savings rates in the mid fours and a couple outliers in the low 5%. That's a great thing. And of course, Battle Bank will be paying in that range for full service checking down the road. But it's really about managing your money, paying attention. If you have money at a broker dealer, put it in the money market mutual fund. If you have money at a big box bank, leave. We naturally would hope that you would come over to us, but there's some other alternatives out there, and they're few and far between. The big banks hold something on 85, 90% of deposits in the United States. And frankly, as long as people aren't paying attention, they're going to keep doing it. It's like coming by a gas station that's charging $10 a gallon. Maybe we'll get to $10 a gallon someday, but that gas station would be out of business. People are just leaving their money there, and then the big box banks are saying, well, hey, if you're going to let me do this, I'm going to go stick it to you. We kind of call it a predatory rate. That's not a legal term, but it's kind of how they're approaching this. So if people don't care, hey, we're not going to give them a value.
So I see from our poll here that the biggest number of people in our chat have savings account that pay less than 1%. But we do have a good group getting between 3 and 5%, and a few getting over 7%. And Frank, I saw an article the other day about banks that offer a high yielding CD. And so you can get in at 4 or 5%. But then when they roll it over, it's built in the contract that they'll roll it over at the new lower rate, which can be less than 1%. So that's something that people should really watch out for when their CD comes due, to make sure that they don't roll over into a low rate like that.
The fine print in banking has always been an interesting element. And you see right now, a lot of people are advertising a 3-month, 6-month, 1-year CD product. And they're expecting you to put it in at a nice high rate. You quite possibly should be obtaining that rate. But when it matures, I'd be 90% sure that that's going to back to the 0.2, 0.4%. So again, it's about paying attention. It's about managing your own money. And I'm sure folks at the Oxford Club really do pay attention to that. Hopefully some of those folks that have added to the poll and say they're below 1% will go take some action today.
So let's get into some solutions here. Rick, I want to start with you. Yesterday you posted on X, formerly Twitter. We always have to follow that with formerly Twitter. that due to retail buying, traditional gold buying, and central bank buying, a tripling or quadrupling of the gold price is by no means out of the question. What is your primary case for investing in gold right now? And what are the best ways our audience can get involved with gold?
Well, I need to say that the strength in the gold market has nothing to do with me or other retail buyers right now. The strength in the gold price right now has to do with foreign central bank buying. That was occasioned really by the U.S. government's weaponization of the U.S. dollar. The foreign central banks, while they don't trust us, don't trust each other even more. And the consequence of that is that they wanted to store reserves in a medium of exchange that was also a store of value, traditionally gold. We weaponized the SWIFT banking system. Whether or not you're sympathetic with the Russians, we basically stole $300 billion worth of Russian treasury securities. And that's given other governments that believe that they might have problems with the U.S. government pause around storing their wealth in an asset that the U.S. government could steal. If you begin to overlay retail buying, and by the way, statistically, retail in North America and Europe have been sellers, not buyers, if you look at the ETF data. But if you begin to overlay retail buying, I think that the price of gold could really go somewhere. Why might retail people in the West buy gold? Well, if you believe that the U.S. 10-year Treasury, as an example, yielding 4.3%, is a yield that's less than the real rate of inflation, you have a problem owning the U.S. 10-year Treasury. And I would suggest that fixed income obligations, sovereign fixed income obligations, are the real competitor to gold. If you are concerned about the efficacy, about the maintenance of the purchasing power of your savings in fiat-denominated instruments, then you begin to gravitate necessarily to gold. I will tell you, too, as the oldest person on this panel, I remember the decade of the 70s. I remember it well. And I remember that the hallmarks of inflation were present from about 1967 onward. The war in Vietnam, which of course we lost, the war on poverty, which of course we lost, left a hangover, a debt hangover. And it was very clear that the only way out of that hangover was to depreciate the value of the obligation by depreciating the dollar. But the market didn't notice. People didn't notice inflation in a real sense until 1972 or 1973. And I suspect that you're saying the same delayed reaction today. People have been through the most benign economic climate in human history in the period 1982 to 2022. Declining real interest rates, strength in the dollar, couldn't get better for us. When it couldn't get better, it didn't. And I believe the world sort of changed beginning in 2022. And I believe that there has been, and will be a delay in people understanding the perniciousness of inflation. The fact that it isn't just a topic taught in university, but in fact something that impacts their own life. My suspicion is that when that realization takes hold, that you will see a real move in precious metals and precious metals related securities. One more statistic for you, Todd. It's estimated by JP Morgan Chase that the market share of precious metals and precious metals related investments in the American market is less than 0.5%, which is to say that less than 0.5% of savings and investment assets in this market, the United States, are represented by precious metals and precious metal securities. The 4-decade mean is 2%. So even if we don't have the type of realization that we had in the 70s, if the mean market share of gold and silver merely returns to the 40-year average, demand for the stuff will quadruple. And that's sort of what I think will happen. I'm not telling everybody to abandon all of their real assets and go into gold. I'm just suggesting that it would be prudent to diversify into gold given gold's historic performance in times like the ones we're facing. I think it's important too, and this is why the work that Mark does is so valuable, that if you are investing for income, you don't invest for static income. You don't invest in income sources where you're really decapitalizing the asset for current yield. You have to invest for income taking inflation into account. You have to invest in income streams where enough capital reinvestment is taking place to make sure that the increases in your income match the rate of inflation. In other words, you have to invest in growing income streams if you're going to be an income investor. Otherwise, you get trapped in the bond trap that we saw in the 1970s, where the capital value of the bond declines at the same time that the purchasing power of the interest rate declines, which for anybody who lived through it was a truly ugly paradox.
Right. And I'm glad that you brought up the idea that you need growing income. That's why we had Mark join us today. He's the Oxford Club's income expert. So, Mark, if the goal is to grow your income above the rate of inflation, what investments should our members be looking at?
Well, it's not going to be a surprise to anyone that I'm going to say dividend growth stocks. It's one of the few income investments that you can pretty much rely on. It's certainly no guarantee, but there are plenty of companies that have long track records of growing their dividend every year. And so if you can find a company that is that has a pretty strong growth rate, especially one that's higher than inflation, that's a fantastic way to increase your buying power every year. And for so long, when inflation was very, very low, it wasn't too difficult to find companies that were growing their dividend by just a few percentage points, and that would have kept you above inflation. Now it's a different story. So finding companies that are generating tons of cash flow and raising that dividend every year by a meaningful amount is I think is critical to maintaining and hopefully increasing your buying power over time.
Now, Rick, gold famously, according to Warren Buffett, doesn't pay any income. Are there any good income-paying investments related to gold?
There are, in fact, although the corporate performance exhibited by the gold miners has been pathetic. So I want to say that first of all.
Except for Franco-Nevada. Franco-Nevada has done well.
That's a different circumstance. Franco-Nevada's management expense ratio, they run the business for 11 basis points. I mean, it's a truly spectacular business. It has operating margins at the asset level that exceed 80%. There is Franco-Nevada. There is Wheaton Precious. And then there's everybody else in the industry clustered below them. What you're seeing right now, as an example, is that while the gold price has increased by, 25% in the last 4 years, the input costs have increased by at least that much. So the margins haven't run. In particular, social expense, which is to say tax, royalty, and off-site subsidies of the mining industry to the communities, have increased very fast. But labor's increased, energy inputs have increased, steel has increased, cement has increased, so that the margin increase that the mining industry has enjoyed as a consequence of the gold price increase has been much more muted because the inputs input prices have increased spectacularly. And I need to establish, I guess, a dichotomy. I invest in gold, the commodity, for insurance purposes. I consider it to be uncorrelated and volatile, but good liquidity. I own gold not because I'm hoping it'll go to $7,000 or $8,000. I own gold because I'm afraid it's going to go to $7,000 or $8,000. I own gold stocks for a different reason. I try to own gold stocks not as leverage to the gold price, but rather because I think there is something internal to the way they run their businesses that will give me an above average rate of return. I don't consider the gold mining industry a good place to go for income. It's a capital-intensive, cyclical business. The part of my portfolio right now that's geared to income, frankly, is banking. Buffett talks about the ideal Berkshire Hathaway investment as a company that has a durable 15% after tax return on equity, where that money can be reemployed in the business, recycled at the same rate of return for a decade. That describes a well-run commercial bank, community bank. There are, of course, other sources of income. For me, community banking is sort of like owning a very well-managed leveraged bond portfolio. So for me, the idea that you could earn 15% after tax and reinvest it for some period of time to generate similar rates of return is attractive.
Rick, there's one question in the group. I don't know if you can answer it, but could you give us any specific gold symbol or banking symbol, either one, gold or banking, for your holdings?
Sure. I mean, we started off the discussion of gold with Franco-Nevada, FN, the best capital deployers in the business by a country mile. Premium priced because they've delivered premium results since 1982. If you come one step below them in the quality trail, you come to Wheaton Precious Metals, WPM, New York Stock Exchange. Nice yield, growing consistently, substantial free cash generator, fortress-like balance sheet. If you want to take a bit more risk and come down to the producers, I think you probably start with Agnico Eagle. Good capital deployers, AE, depending on where you choose to buy it. Probably without more discussion, a group of people that aren't gold industry investors should stop there. I think buying the market beta, buying the best of the best, and then relaxing is probably the best possible strategy for most folks.
Well, Franco-Nevada's business is amazing. When you look at, they only have like 35 employees, something like that. It's a very inexpensive business for them to run, and you see their stock, it just goes straight up over time. Frank, I want to jump over to you. We've had some questions earlier in the chat about where is a good place to find yield right now. If you're looking at safe money investments, what's a good opportunity right now?
Well, I think safe money is always an interesting description. You're looking at return of capital first, and then return on capital. And it's interesting right now. In the U.S. with the 10-year, around 460 is actually the highest, except for New Zealand, in the first world. And the 10-year at that level sort of implies that the market continues to believe that inflation is going to be there for some time. It probably should be a little bit higher in my view, but that's where the invisible hand has pushed the 10-year. But I think people should be looking in relatively short term. Our view, and everybody, predictions are worth the air that I'm breathing, but is that this inflation probably will be persistent, that there will be additional possibilities of rate rises. And, following Mark's dividend strategy is certainly a key element. But if you're going to be putting money in the short term, it's either in the high yield money market accounts or those, 1 year and under CDs if you're coming back into the banking market. Those rates are, 4.5 to 5 on both elements. There are a few outliers at 6, but I didn't recognize the names, and I kind of like to know the name of the company I'm putting my money with. Hopefully, if they continue to pay those rates, we'll understand them and look at their balance sheets and their income statements and see if, in fact, they're fortress. But I probably wouldn't be venturing off into that neighborhood right now. So that's what I tend to be a little bit short. It's funny you're talking about this long-term persistent inflation, and sitting on our high school's endowment committee the other day, they really experience all these different elements. Wage inflation, price inflation. Their tuition on the other side can't go up at the same rates. And talking about the portfolio, I think we really came to the conclusion, much like Mark's recommendations of, staying in those growth, high dividend paying securities. So that's kind of like your long term. I'm absolutely with Rick in terms of my insurance policies in the precious metals world. But short term, high yield savings, short term CDs, money market mutual funds, as long as they're going to not break the buck.
Yeah, and I can just mention that today in Wealthy Retirement this afternoon, I have an article coming out about short-term rates and where they are. And personally, I've been stashing my cash, my short-term cash, in very short-term CDs and treasuries. Right now, they're paying between about 5.1 and 5.3%, depending on where you're looking.
Great. Yeah, I mean, we had a couple questions about what are the best ways to take advantage of dividends right now, whether it be in gold and silver or, Mark, are there any dividend aristocrats that you think people should look at right now that are companies that are going to increase income every year?
Sure. So, I mean, the companies that I love that have long track records of raising dividends, I've talked about Enterprise Products Partners. EPD is a symbol, the pipeline company. They've been raising their dividend. They're not technically an aristocrat, I don't believe, but I'm pretty sure they've been raising their dividend for over 20 years, and they have a really nice high yield. I love AbbVie. That's no secret for anybody who's followed my work for a while. The big drug company. They just generate loads and loads of cash and have raised their dividend for quite a while. One of the companies I've been talking about quite a bit lately, the stock has not performed well, but the dividend is fantastic, and I do think that the company will turn around. It's Cogent Communications, CCOI. They have a pretty big dividend yield, over 6%, and they raise their dividend every quarter. They have been doing that for, I believe, 14 years. So that's one you're gonna have to be patient with. The stock's not going to double tomorrow, but you're going to get a really nice growing yield, and eventually, I do believe it's going to pay off in a big way.
Great, yeah. Thanks for sharing all of those with us. I want to get into Battle Bank a little bit here because Rick, Frank, Mark, and I were all talking about Battle Bank last week. We do that fairly regularly because Mark and I are both invested in Battle Bank. I put a pretty good chunk of change. Once I saw how well Everbank did in the past, and Frank told me he was starting a new bank, I said, I think I'll be joining in on this. And we discussed some of the really interesting products that they offer that really are different. And Frank started this with Everbank, really creating new types of banking products that are exciting. I'll give you one example that I loved from the Everbank days. They had a market safe CD. And with a market safe CD, you could invest in, say, precious metals or oil, something like that. And your principal was 100% protected. So it was like a CD in that you could not lose money. But if gold or oil went up, then your investment went up. And that was a really exciting sort of offer to me. Frank, could you talk a little bit about founding Everbank and what you guys are doing with Battle Bank? What kind of products you're going to offer that will be, new and exciting for our audience?
Well, sure, absolutely. Going back to around 2000 when we founded everbank.com, we kind of looked out at the market, and oddly, as we're looking to form Battle Bank today, it's many of the similar situation. We look out, and we talked earlier about the fact that big box banks are paying nothing. We didn't mention some of the fee structures. Some of those are, frankly, astounding. One of our chief marketing officer always jokes. He said, "Would you walk in and give the lead teller $25 a month just for, say, being nice to you?" Which is kind of what they're doing in some of these cases. But we looked out at the environment. People were paying low rates, charging high fees, and providing poor service. And we thought, well, gee, that doesn't seem like a good business plan. Why don't we go a different direction? And we provided, when we opened in 2000, our checking rate was 601% for full service checking. And people thought that was pretty attractive given their other people were still paying 02, 03, 04. And over the years, we also added precious metals, foreign currency deposits. You talked about the market safe deposits that Everbank offered. And I think if you look at today, 2024, many of the same things are occurring. It's always been a little puzzling to me. You go to some of these big box banks and they might have 14, 15 different checking and savings products, none of which are designed to help the consumer. We've sort of gone in a different direction. Our high yield cash account will be one account. Today, probably pay $430, $440 use it as a piggy bank, just park money in it, or it's a full service checking account. Write as many checks, do as many online bill pays, ACH, whatever you want with it. And then from a diversification standpoint, we just, people want access to precious metals. They want access in a secure and sound manner. There's some great dealers out there, and we certainly feel good about them. But there's a lot of folks that maybe aren't where you want to put your precious metals. And as a bank, we securely store. If that's what you want, we'll ship it to you. Gold, silver, platinum, palladium. And of course, we'll offer, rather 18 different foreign currency deposits, whether it's a money market deposit account or a CD. It allows you to diversify outside the US dollar, not with all your money, but it's a good diversification asset. And our version of the market safe is just called market index. There's this little thing called trademark. We're not going to change over from the Everbank days. But you're absolutely correct. We take 100% principal protection. We pick an index that's of interest to people. It might be in the equity market. It might be in commodities. It might be in precious metals. And then we build this deposit and allow people to invest for 3 to 5 years, 100% of your money back. And the return will be based on that index. I can remember certainly in the early 2000s, some of the precious metals ones were just wonderful, owning them personally as well. So that's kind of what we started out at Everbank, and now we're translating that to Battle Bank. And I think, based on the interest that we've received, a great wait list coming up, that people are responding to this very effectively.
Yeah, I was in one of those market safe CDs also. I think I was in one that was focused on currencies of natural resource rich countries. So it was heavy in the Canadian dollar and the Norwegian krona. So that was a great way for me to diversify also outside the US dollar and have it guaranteed. So I'm excited that Battle Bank will be bringing that back.
It's interesting, since 2017, the currency markets have been, frankly, kind of flat. But not unlike the fact that gold was sitting still for a number of years before it began its most recent run, we sort of feel that this may be the great time to be getting back into some of those. You can do it directly through Battle Bank deposits in those foreign currencies, but we'll probably also come out with one or more market indexes that allow you to dip your toe in. And, those are great for retirement accounts as well. That's not where you want to lose your money. You want to have your income and so on elsewhere.
So, Rick, I'd like to jump to you real quick with 2 questions related to gold. First is we got a question about the best place to store gold, and I'm sure you have an answer for that, probably the backyard. But the second question is just you mentioned when we talked last week about something Battle Bank is doing that will be different for gold investors and people who hold physical gold. So I was wondering if you could touch on that.
In terms of the first question, when I was a young man, I, in fact, did advocate what you suggested, which is to say backyard gardening, midnight gardening. I have known 3 people who stored gold personally who had very bad experiences. They were visited by gentlemen who they normally wouldn't invite to lunch and relieved of their precious metals. So I now believe if you want physical possession that you should probably store it in a safe deposit box. And to be certain, store it in a safe deposit box in another country. I store mine in Canada, fully disclosed. But my preference these days would be in a segregated account, which is to say where the gold is held on your behalf, but it's held at Brinks or Loomis or Viamat. And I make a distinction. I don't want you to hold gold in a segregated account in a storage facility that isn't audited. Too often, I remember in the decade of the 70s when people didn't trust their government, so they trusted their gold to scamsters who purported to store it from them and in fact stole it. So I regard safe storage as held in a segregated account in a storage facility owned by a publicly traded company that is subject to audit. I want to know the balance sheet and the income statement of my fiduciary. I have very specific requirements in my declining years. I own gold to sleep better, not to worry more.
Right. So we had a question here. Can Battle Bank provide Roth and traditional IRAs for all these offers? I bring this up because I know we talked a little bit about kind of the revolutionary way that you handle IRAs. Could you talk a little bit about that, Rick?
I would prefer that Frank did that. I mean,
Okay.
I have to say, when Frank told me what we were going to do with IRAs, I thought I was going to go to jail. I thought what he was proposing to do, it was such a good idea for the customer. I thought for sure it was a felony. So Frank, over to you with. And by the way, I checked with my own counsel before I invested a dime in Battle Bank. I said, Frank, I love you, but I'm not going to jail on your behalf.
It's a fabulous approach to retirement investing. And some people may be familiar with it, but it's a very limited number of folks that do this across the country. It's called the checkbook IRA. Bottom line, we come in as a custodian for your IRA, just like every bank in the country might be able to do. And underneath your IRA, you own 100% of a limited liability company that is in the name of the IRA. And in that, normally, of course, when you go to a Schwab or Fidelity or Vanguard, you can buy their mutual funds. They're more than happy to allow you to load up on where they're going to earn a lot of fees. But there are many other things that are eligible investments in an IRA, and these are dictated by Congress, and they're very straightforward. And from this checkbook IRA, you can invest in any eligible IRA asset. Many of our customers, we expect, will be getting into multifamily or income-producing properties. That's not something you're going to get at Schwab. That's not something you're going to get at Fidelity. And what you're able to do there is purchase a flat number of income-producing properties. Maybe you do it in the U.S., maybe you do it elsewhere. And in that IRA, that's completely eligible investment. Obviously, you check from time to time with your own counsel, but that is completely legal investment. There are other things you can do. You can open brokerage accounts from here. You can deal in hard money loans. Should crypto be something that you're interested in, you can do that from your IRA there as well. All of these things are eligible. And this is also something we can do in a solo 401k. Many of us are doing gig jobs, or perhaps we're doing our work from a sole proprietorship basis. And this allows you to shelter income on a current basis, as well as then invest it as you see fit. So we're really excited about this. And several of our team members have been doing this for many years. They have also gone through all the legal traps multiple times. They have done it inside of a national banking organization with the full agreement from the regulators. And this is exactly what we'll be doing as we open Battle Bank.
That's great, Frank. I think we should get into the questions now. So Frank, I'll start with you. Is Battle Bank an option for Canadians?
Canadians, yes. We'll be opening with U.S. and Canadian clients. We're looking forward to that. Down the road, can we get other jurisdictions involved? Yes, but that's definitely down the road. But Canadians, we're looking forward to having you come on board.
By the way, if I might interject, if the Prime Minister of Canada had asked us to freeze the bank accounts of Canadians who were political opponents of his, say truckers, probably we would have greeted his inquiry with the international high sign of unfriendliness. I suspect had we been open before that, we would have immediately received $1 billion in Canadian deposits, which would have been very pleasant for us and for the Canadians.
Well, it's good to know that we have somebody on our side fighting for the rights of people to control their money and be able to protest. Um, here's another question from Alejandro. When will Battle Bank be open? And I want to know too, as an investor.
Well, I'd like to know too. We're in the process of our regulatory world, and of course, when you're talking about regulators, there's no timeline necessary. The FDIC is sort of our final leg on the stool. They have done their exam over the first quarter, and they have it at Washington and at our regional office in Dallas. And when they choose to respond, they will hopefully provide us with an insurance certificate, and we can open the doors.
All right, so here's a big question, and I'll just direct people to the link if you want to learn more about Battle Bank and join their waitlist. We have a link at the top of the chat, so just go ahead and click that and check it out. Frank, Rick, I'll ask you guys this: is there a way to invest in Battle Bank? TK Site asked that, and another member asked, what will be the minimum to invest in Battle Bank? So could you just tell our members a little bit if they're interested? I've invested. I've known Frank and Rick for quite a few years, decades, and I love what they did at Everbank, and so I invested in this. But everyone has to make their own decision. But Frank and Rick, if you could tell people how they could find out more about that.
Well, as you said, initially you go to battlebank.com. There is an invest tab, and you can learn all about how you can invest in Battle Bank. This is for accredited investors only. The minimum investment is $75,000, and it's a convertible note. Currently, is offering 7% and will convert at the next equity offering. I want to not get too deep into the details because, of course, there's an offering memorandum there that you should read, understand, and make your decision based on that. But we're very excited about this. We've had some excellent pickup on this convertible note. And it's a great way to get involved. One of our key elements is we really want to have, as a community bank, a community of investors and depositors, community of investors and clients. We want all to be in this together. And I think this is one of the ways you can participate if you're an accredited investor. So certainly encourage you to go directly to the site there, or just go to battlebank.com/invest. And you can read all about the opportunity and all the technical details and see if you're eligible.
Might I comment, Todd?
Absolutely.
I think it's important to note at the top of the discussion that investing in a starting business always involves risk. Frank has been serially successful. I've been a pretty good bank investor. That doesn't obviate all the risk, which is one of the reasons why the federal government has limited this to accredited investors. But beyond that, what Frank said is extremely appropriate. I personally don't want to have Frank operate a bank that's managed on behalf of hedge funds that have a 90-day orientation. I have absolutely no interest in investing along somebody with a 90-day orientation. I have a huge interest in investing in an institution that serves a community like the Oxford Club has served its investors for 35 years, where a community becomes a community. I want to be invested in a bank that's owned by its customers and by its employees. And I think what Frank says, that Everbank is a community bank with community not defined by geography, but rather by values and interests, is the chief investment attribute. I liken it to a sanity-based bank. A bank is an example where derivatives are used to hedge interest rate risk, not to trade against. A bank that isn't excessively leveraged. A bank that doesn't try to invest in 1,000 industries or loan to 1,000 industries because they can't understand 1,000 industries. If that sort of thing appeals to people and they have the means, by all means, look at the offering memorandum. And finally, I'm not in the investment business anymore, except as an investor. But if there's anybody on the call that wants to talk about Battle Bank, having read the stuff, get in touch with Frank and I. We're surprisingly easy to contact. You might have a difficulty shutting us up, but we're very interested in talking to people who are interested in what we're doing.
And Frank, correct me if I'm wrong, but for anyone who is thinking about investing, this is not a short-term investment where the bank opens the doors, you'll start getting paid dividends. The value is going to go through the roof. This is a long-term investment. You're investing in basically a startup bank, so keep that in mind.
Yep. Well, as Rick said, it's considered appropriately a high-risk investment, and it is a term investment. Rick and I, despite our experience in years, are looking at this in the very long term. And I think if with a community, that's exactly what the community would want. I think many people were a bit upset when we sold Everbank. To a certain degree, we're delighted with that because we hope they'll come back to Battle Bank at this point. But we're in it for the long term. We want to build a community and be able to provide that community with the features that they want. Both from a depository and investing standpoint, also from the lending standpoint. And so more community members we have, the better.
Let's try and get through a couple rapid fire questions. And then I wanted to ask a question unrelated to Battle Bank coming up, because I think that Rick will probably have a pretty interesting answer. But a quick couple of questions. Alejandro asked, why did you choose Battle Bank as a name?
Well, I can speak to that. We want to fight for your money. We want to battle for better banking. And in our home district of Eagle County, Colorado, there's also Battle Mountain, one of a traditional mining operation. It was one of the greatest silver and lead and some gold were found on Battle Mountain. And we thought all this kind of came together. And it's also very beautiful. So when we put it on the front page of the website, it looks pretty good too.
What are Battle Bank's custodial fees for the checkbook IRA?
I'll have to go back. Those aren't finally settled. We'll just keep up with our site. You can take a look there.
And will you be offering business checking too?
Yes, we'll be offering business checking as well in U.S. dollars to both Canadians and U.S.
And in our rapid fire session here, can EU citizens, or we had somebody from Italy ask, is there a way to open accounts?
As of right now, no. EU laws are rather different than the U.S. We'll have to work through that with our compliance group before doing that.
Last one I'm going to ask real quick is, are deposits FDIC insured?
Once we're open, they will be FDIC insured.
All right, now, Rick, I wanted to ask you a question. First of all, thanks for all the great questions from our members. I know for me, I am invested in Battle Bank. I look forward to opening an account with them. I think that Everbank was a wonderful business that Frank built, and I'm excited to have another opportunity like that, just as a place for my checking, my savings. So I hope that people will learn more about it, and I'm looking forward to the launch. Very much looking forward to the launch.
Yeah, I'm not too happy to have. I had, when Everbank got sold, I ended up going to a big bank, and it's miserable. So I can't wait for you guys to open the doors.
Now, Rick, I just wanted to ask you. We have only 6 minutes left, but there have been a number of questions about digital currencies and the shift in America to digital currencies. So I thought that people would enjoy getting your thoughts on whether the digital currency is coming and how it will impact our economy, banking, all of that. You have 5 minutes.
That's not long enough. I am terrified by the concept of a central bank digital currency in the way that Congress is talking about it now. The idea that you have an overarching electronic currency that they have the ability to cancel depending on how they like what you do or what you say is terrifying. If you overlay the technology currently employed in the People's Republic of China, social credit scoring, with the concept of a government-controlled currency, not cash in your pocket, but rather a digit that they control, and they have the ability, which they've stated that they want, to be able to cancel your currency. I can't think of a more Orwellian despicable circumstance than that. Suppose you're a Democrat, an enthusiastic Democrat, and you have a Republican administration, and your values are the values, the progressive values traditionally espoused by the Democratic Party. Would you want Trump in control of your savings? Suppose you're a Republican. Suppose that your values are traditionally conservative values. Would you want your savings controlled by and cancelable by Biden or AOC? Think through this. Resist.
Well, there you go, folks. I thought that would be a fun little ender, and really appreciate it, Rick. Frank, Rick, Mark, it's been fantastic having you all on. Thank you so much to our members for participating with the conversation today. I hope you learned a lot. I hope you got some good investment ideas. And in the future, I hope you'll be able to open an account with Battle Bank. It's very exciting what Frank and Rick are building, and I look forward to the launch of that. All right, everyone. Thanks for joining.
Thank you, Todd.